Moving on to the session for today, I'm more than pleased to introduce our moderator for today, PK Gulati, someone who very powerfully and gracefully embodies TiE. While PK is the President Emeritus of TiE Dubai, sits as a trustee on the global board, is also the chair for the TiE Global Summit 2021, he also does very other interesting things. Prashant K. Gulati, popularly known as PK, is an entrepreneur, idea accelerator, angel investor, mentor, and writer with interests in exponential technologies, innovation, startups, entrepreneurship, future of work, mobility, knowledge sharing, and more. He's a very active early investor in startups and fresh ideas. With a portfolio of ventures in India, Middle East, and US, he's actively involved in providing mentorship, guidance, and advice to such companies at various levels for over a decade. He has been associated with several successful startups and has an active portfolio in the US, Middle East, and India. He has been very actively associated with TiE, of course, Hub 71, Dubai Future Foundation, the Assembly, In5, Innovation Center, Smart Start Fund, the list goes on. PK, without further ado, the stage is yours.
Thank you, Cicely. Thank you very much. It's a pleasure and a privilege to today host this session, which brings a very, very interesting dimension to what the startup journey has been, which is the exit. And it's a multiplied pleasure because today I have some of my old dear friends who have, we've been able to see as a startup and today as a public company. So it's my pleasure and privilege to welcome Eddy Maroun, the co-founder and CEO of Anghami, Walid Mansour, a dear friend who has trudged with me as the ecosystem was built in this region, part of MEVP and other ventures and other investment ventures here. Thank you for coming, Walid. And last but not the least, Jacob Cherian, the man, the SPAC man, as I would take the privilege of calling him, the person who's behind, the SPAC, which took the first Middle East company public on the New York Stock Exchange. Thank you, everybody, for coming in. Let me start with Eddy, a lawyer by profession and a musician by choice, somebody who saw this space of not having enough or any legal way of streaming or listening to quality music, decided to get together with his friend, Ali Habib, to actually build something which had a lot of Arabic content, especially, along with, a lot of international content, to actually build the first worthwhile streaming service for the Middle East. Ali and Eddy are the proverbial founders, trudging away. I remember the first days, Eddy, we can go and sit around, some fireside chats and talk about it someday. But today, it's an exceptional day to talk about what startup founders actually start building startups for, which is the exit event. And you took the unique exit event at least for the Middle East, of taking your company public via a SPAC. How does it feel, Eddy? The work is done or the work has just begun?
First of all, thank you for having me. Thanks for the intro, PK, and it's a pleasure to be with you on this panel. And it means a lot because, you're probably among those who were around from day one. I also remember the first days at In5 when, I was here in Dubai. I was probably me and Ali in the company with a couple of people in Beirut office. And I was running around here in Dubai. And then I got in touch with the In5 people. Thankfully, they had the lot at the time, setting up everything, helping us with the incorporation of the company, an office that is plug and play. It was an amazing solution. I remember you were around there. So this tells you how things, start and how, small things can be a beginning and things can develop and can grow. Here, I'd like also to thank the UAE for the ecosystem they've been able to create, because it helped a lot also on, being the foundation for whatever we've been able to achieve. It's really interesting. I love always to remind our team how we used to function, how we used to operate when we were a couple of people, how we used to focus on the things that matter the most, how we used to really focus the budgets, the energy, the everything onto the things that matter the most. And probably one of these things was focus on the product, on the technology, on the team, on the content, on marketing, and how we can really grow and scale up. And then, you know, you become a bigger company whereby you start thinking of the next stage. And here we are today, you know, with the SPAC opportunity that we took this route that we took with the leadership of Jacob on the SPAC front. You know, if you look back at where we started and where we are today and the journey, it's really interesting how, you know, a company can grow and develop from and throughout these stages and remain focused on the things that matter the most. That's, in my opinion, what really makes it interesting. So you don't, you know, get distracted on the things that do not impact directly the business. Now, clearly, each stage has its challenges, but I believe that the main thing is to really have the right ecosystem around you and the right people around you, and focus on the things that matter the most and that can impact the business for each stage that matters the most. And here we are today, and we're very grateful for where we are, and we believe that now we're starting chapter 2. So it's not the exit, it's not kind of the, you know, the in the contrary, it's the beginning of chapter 2. A lot of things that probably you would never been able to do will be possible now. And a lot of things that we used to do will not be done anymore. So a big change, but it's always around how good your strategy is, how great your implementation and your team is. And I mean, that's what, again, eventually that's what matters the most.
So Eddy, Walid was, you know, one of the first investors, formal investors in Anghami, like the first people to come in. And Walid, you know, being a VC, you looked at these two founders, you know, who moved here from Beirut, who were trying to build this, you know, streaming service where the rights of music were completely kind of up in the air. Nobody knew who would get it or who has content. They come in and you guys write a check. You know, it's a big risk. How did you see that happen? You know, it's worth talking about. What did you see in them which made you write a check, and then stay with them for over multiple rounds?
Yes. Well, first of all, thank you, PK, and good afternoon and good evening for everyone present here tonight. It's a pleasure to speak to this distinguished audience and share some of the highlights and of that journey. This is getting close to a 10-year journey with Anghami. So for those who want to situate, we were talking about the early 2012, mid 2012, when all of the first meetings happened, and that led to a 9-year journey. So we're getting closer to a decade. It tells you a lot of how much effort and time do you need to build a giant business that doesn't happen overnight. It takes a lot of time, lots of effort, lots of iteration, but eventually, you know, you can hope to get to biggest outcomes. And we're very proud to be the first tech company in the Arab world to go on Nasdaq. The first company since Aramex to go on Nasdaq. So two important milestones.
That's a generation gap, basically. That's a whole generation in between.
And it tells you a lot about the readiness of the ecosystem, whether it's on the financing side or on the technology side and on the options side. And God knows we had so many options, you know, and opportunities, and you know, maybe we can touch upon that. But eventually, I think meeting Jacob and his team was a wonderful process, and also Jacob would probably say it from his perspective. But that the whole thing actually, Eddy's talking about chapter 2. This means that chapter 1 probably has at least 20 sub chapters under it. At least one chapter every
and
year.
probably a million ahead, probably a 1 million ahead, correct?
Yeah, exactly.
Many ahead. Yeah. Let me at this time welcome Jacob. Sorry.
To answer the question, sorry, to answer the question briefly, what we saw. The early investment, the pre-seed early investment game requires requires a certain discipline. One, first of all, is the people you back, which is the number one criteria with regards to the harmony of the team, the capabilities of the team, the vision of the team, and that's very important in any pre-seed or seed investment. And second is the size of the opportunity. And 3 is the articulation of the product roadmap and company roadmap to get there. And point 3, I can assure you that we spent a lot of time, and I still remind Eddy, on some of the decisions that were game changers that were taken during the first day. One of them, I remember them very clearly, was the size of the library, where Eddy was very adamant on having a complete library since day one, which was probably tripling or quadrupling the cost of the investment. In hindsight, that was a great decision to do because it opened up so many things. Another decision where we fought a lot on, not fought, but we really didn't have a clear answer on, was whether to go mobile first versus web first. Remember, this was 2012, and being one of the first mobile first companies in the world, actually, not having lots of benchmarks before, not having necessarily the right talent to build all of that stuff, was also another decision that got put it in number 3, which is, what is your roadmap? How do you go about it? I can spend hours on the number of micro decisions that happened, but those are kind of the 3 things I clearly remember from those days in 2012.
Walid, we'll come back to this, and I want to know about, because I think this is the small things, the micro decisions which matter macro, at the end. So want to know more about it, and I think a lot of people would want to know. Let me take this time to welcome Jacob Cherian to join us, Mr. SPAC Man, the person who actually made this SPAC happen, and somebody who's been, a part of the SPAC, methodology of raising money on stock exchanges and then taking very important companies public. This is not his first SPAC. He's done multiple SPACs, and when I was speaking to him earlier, he probably has even larger, plans of doing far more and far many. He's been, somebody who's a veteran in New York with experiences in JP Morgan, KPMG, and, a techie as a computer science corporation partner. So with a very, very great experience and a specific interest in the media and content industry, Jacob brings a very diverse experience. And then he decides to walk into the Middle East, pick up the crown jewel of what we ended up creating in the last few years of the ecosystem, and takes it public. So Jacob, how did you end up here? How did you end up first finding Anghami, coming to the Middle East, and then it looks like you're looking at a lot more in the Middle East. So tell us about it.
Mika, thank you. It's great to be with you and the whole TiE distinguished guests, as well as Walid and Eddy. It's truly an honor to be with you all, and really appreciate the opportunity to be with you. And just to take a step back, and when you look at Eddy and Ellie and what they've accomplished, you might think they're an overnight success. They're a 10-year overnight success, and it takes a lot to their credit what they've accomplished with Anghami. In terms of the journey to Anghami, Anghami, we completed our transaction, our IPO, back in August of 2020, and we set out to find companies that we believe were, that fit our SPAC mode, which is media entertainment, a certain size of the a company as well. We raised $100 million, and we were looking at various companies. And before we came to Anghami, we had actually seen a couple of dozen companies. Anghami came to us through a good friend of mine from Nasdaq Dubai, who introduced us to someone else in Dubai. And then we looked at Anghami and we thought, hey, this is a great company with great management team. Just what Walid said earlier, you know, it's not just one thing that matters in a transaction. Obviously, when you bring a company like Anghami, any company to Nasdaq, there's a huge criteria that you have to follow. I mean, investors in the US are very unique in terms of they want value. They want to have a great growth story. They want to have a great management team, regulatory-wise, corporate governance-wise. It has to check a lot of boxes. Excuse me. And to find such a company is not an easy task. What impressed us about Anghami more than anything else, one, the management team, Eddy, Ellie, and the team. The holders of Anghami, the shareholders of Anghami, MEVP gave us a lot of comfort in the sense that with the likes of Walid and others at MEVP, you know, they really saw in a company and they did their due diligence, and their backgrounds gave us a lot of comfort. And then you know, looking at the due diligence aspect of it, the technology, the legal, they fit the bill in every way. And we believed that there's a story that we can really scale up. What impressed us most, actually me most, about Anghami and Eddy and Ellie is, you know, how much they were able to do with so little in terms of capital. You know, there's a misconception that the Middle East is flush with cash. It is. There's multi-billion-dollar funds, sovereign wealth funds all over the Middle East. But the actual funding a lot of the Middle Eastern companies receive are far less than their, excuse me, than their counterparts in the US, for example. In the US, Eddy and Ellie might have attracted probably 10 times the PE or the VC capital that they are attracted. And so we were impressed with what they're able to do with such a short amount of the capital. And so impressed with the management team, excuse me, as well as, you know, their vision of what they wanted to accomplish. Eddy and Ellie from day one said, you know, they had a great vision for the company far beyond the borders of the Middle East. And so that's exactly the vision that we need to bring a company to a NASDAQ platform, which is the world's leading platform. If you're in the US, in NASDAQ, NYSE, you have to have that kind of vision. And so they fit the bill. And now we're very happy with the decision that we've made. And we are a couple months away from the actual Anghami trading on NASDAQ. We're going through the regulatory process, and we're all excited.
Awesome. You know, let me give some statistics to people about what SPACs are. SPACs, of course, a special purpose acquisition company, is what is also called a blank check company. And by the way, the blank check companies have existed in the Middle East also for a few years. Some of the people here may remember a company called Jijico, for example. They were a developer, they did a lot of stuff, they were in retail. You know, those companies are all blank check companies. So these companies actually go to the market, raise the money, and then find the target to buy. And just to give you a summary, they've existed for years, but it seems in the last 2 years, the interest has massively multiplied. I have some US numbers. In 2016, only 13 SPAC IPOs happened, which came in 2019 to 59. But in 2020, the number was 248. And in 2021, till date, 347 SPAC IPOs have happened. And the amount of money raised till date, today in 2021, is $107 billion. According to the data that I have, there are 419 SPACs which are looking for an acquisition, with $131 billion ready to spend. That's a great number, Jacob. What do you see happening? Like, do people see this as an easy way to go public? Is that why you see this interest? Or just that, you know, in the last few years, we've built companies which have delayed their profitability, you know, in their quest to, you know, build growth and size. So is this becomes a convenient method for them to go public? What do you see this interest from?
You know, that's a great question. In fact, if you look at a SPAC, SPAC is not an easier way to go public because we have to go through the exact same hurdles as any IPO that comes in the US. But it's sort of the democratization of an IPO process in the coming to the US. For example, if Anghami or a company like Anghami want to become public on Nasdaq, that's a larger hurdle because they have to go through the full IPO process, finding the banks, the whole gamut. And a lot of times you're not a guarantee that you can go public in the US, even if you get to the last stage. But this SPAC world, what it does is, once it finds a target, the founders of the SPAC or the sponsors have done the very hard work of taking a company public already. And since they're public, all you do is once you find a target, you do the due diligence and you merge in that target company into the blank check vehicle, the SPAC vehicle, and then the company starts trading. It's not an easier process. It's much more of a democratic way to find companies in the world that they might not have access to the U.S. capital markets. I've done, this is my first SPACs. I've done the first Indian company took it public in the U.S. markets. To complete that deal, I had to get permission from literally the finance minister of India at the time, Chidambaram, and a special exemption from the SEC to get it done. The second one, I did the first esports company on the Nasdaq. So a lot of these companies that that come to fruition public through a SPAC are not bad companies or good companies. It's just that sometimes they simply do not have the capability of spending $1 or $2 million up front to go public or go through the regulatory hurdles to take a company public. For any company in the Middle East or Asia that want to come public in the US, it's a 1 to 1.5 year journey and a huge amount of capital without the guarantee of them becoming public in the US. So this it's a democratic process, what you can do with the SPAC, taking companies from the Middle East, from Asia, and all over the world, gems, and bring them into the US capital markets.
Eddy, let me come back to you. Obviously, the SPAC only works when you have something substantial, something profound, a good company at the heart of it, correct? And Anghami proved one point that you could start as a startup, a small startup, and make it into a company which is worth being taken public or reaches the public markets. There's a lot of steps you've gone through. There's a lot of learning to do. If you wanted to summarize it for other people, remember, a lot of our audience are people who want to follow on your footsteps. What are the few things that you need to make sure you did? We had you and Ellie speaking about, the tech stack, how Ellie worked on that. We had you and, talk about rights issues in our past, conversations. What is it that we need to have to build a robust company like yours in this region with all its limitations?
Yeah, that's a very important question. I believe that, first of all, the company stage should be, the right stage for it to take this kind of step, because it's no small, it's a very different way of being public, compared to being private. And I believe that also the timing is very important. The story itself should be really compelling and strong enough so that it resonates with the public markets, can be attractive enough for investors and for the SPAC itself. And I think also the SPAC and the size of the SPAC and the people on board the SPAC play a huge role into this kind of process, because if you're not, after all, it's a merger. If you're merging with the wrong, I think, SPAC, from a size point of view, from people on board, I think this can be very dangerous. It's very important to notice that also the process can be lengthy. It can be also tough. There's a lot of resources that need to be allocated for the process itself. Many think that, listing through a SPAC is a shortcut or something. I believe that there's, the process is still, listing. So you should be ready for this. And the SPAC is just the vehicle, right? So it's not that you're doing an IPO in a different way. After all, you're going public. It doesn't matter how you go public, right? It's like you're going from a destination to another. It doesn't matter how you go there. It's, you know, when you get there, you're up to it or not. And here I have to give a credit to Jacob and the VMAC team that we felt that there's, you know, complementarity in the background. They're coming from a media background. They know Wall Street. We complement each other. We can synergize. And I think the size of the SPAC also was really convenient for the size of our company. So all of these should be together, but clearly the stage of the company should be adequate enough. And, you know, you should be ready from a growth point of view that, you know, the engine is good, is tested, the model is tested. Definitely you need to beef up so many things, starting from maybe the team, the vision, the everything, but you need to have the basics, the essential, that once you, you know, go into such major stuff in the history of the company, you're doing it at the right time with the right, you know, team and strategy. So that, I don't think that it's an easy thing. It's not that straightforward. And it's not, in my opinion, for every company. In many cases, probably remaining private and fundraising privately could be way better, but also being listed in a, you know, deep market like the US, being on Nasdaq has its, you know, advantages as well. You feel that you are turbocharging your growth. You're remaining independent. You can execute on so many things. You can think bigger, you know, and as Jacob mentioned, you know, we've never had really access to a lot of funding. So at least you feel that you're well funded to think bigger and go on a bigger mission and roadmap. So these are among the things that you should consider when and if you want to, you know, go this route.
So Eddy, also, while you were building the company, you did build a unique company. Besides the frugality that you talk about and Jacob talks about of how you've been able to build something out of far less resources invested, you also were, like Walid mentioned, that you were mobile first very early, one of the first companies to think mobile. I also see that, and I remember particularly your direct connection with telcos. So that was another pathway which was early in terms of other people thinking about it. You built a pretty substantial tech stack. I also remember the unique Rotana deal for, you know, the portfolio of Rotana music that you did, which was unique, which put you one step ahead. So there were a lot of steps in between that you did to create this unique company. So a good thing would be to tell people like how you thought of the larger picture or a deeper thing, like what Walid said, you know, you decided to take the full portfolio of full catalog rather than a partial catalog, which most people would have chosen. So it must have been a hard journey in that sense to take this, to build this robuster platform, which is world-class today.
So I think that, you know, throughout the learnings, we had, speaking of, you know, this kind of a license. By the way, the decision was that we should do it Arabic only. And the board was me, Eddy, and Walid. And I was, okay, let's do that. But I kept negotiating and I kept, you know, chasing the international labels as well, because I believe that I believe that you need to provide really a world-class experience. And us as Arabs, knowing our culture, we don't only consume Arabic and local music. We want all kinds of music, but the way we consume this music might be different. But you need to have, you know, a bigger catalog. You need to have also world-class product to really make an impact. And I always, Eddy as well, always thought that let's push it a little bit further always. And here, when you talk to people or partners that this is your, you know, plan, this is what you're planning to do, this is the way you're going to execute, you can get, you know, some support on how you can structure the deals in a way that they believe in your story. They believe that if you do it right, they'll grow with you. And I really remember agreements that we had at the time for very tiny, like $50,000 that now are, 10 or 15 times larger, and we built value for many. So I always believe that you need to think really big, make bold moves, sometimes that do not really make sense from a P&L or financial or pure kind of business point of view, but on the long term, on the bigger vision, they make perfect sense. And here you need to make sure that even you're making such kind of moves, you need to be able to defend them and have your partners, like Walid mentioned, that was really adequate. That was really good, because such moves can also, be negative
Backfire.
and backfire and kill the company. And after all, you're the one who's accountable. I always also believe in the sense of the founders, because no one really knows and feels and is connected with the business and the users and the market and everything like the founders. I'm talking at the early stages, then it becomes the whole team. So you need always to believe in what you have, in your guts, in your vision, and try to somehow not be stubborn, listen, but really be somehow determined about what you have in mind, be it on the product, like Ellie was, let's go mobile, and I was 100% convinced that it's the way to go mobile. We went to with telcos. We had our launch in November 2011. 2 weeks after we announced our first deal with Orange Jordan, it was like, how come? I mean, many people thought that there's something wrong here. So we knew that this is the way for us to really scale up and start being serious and start to having kind of case studies to replicate in other, markets, territories, etc. And we also were genuinely trying to provide something that is world class, that is really an experience that makes everyone happy, because we've had a lot of services around music built by probably telcos or initiatives that got a lot of funding and support, but weren't really up to the expectations of users. So that was also something that we tried to genuinely deliver on and bring in the maximum, content possible on the platform, bring in the best, the maximum support for many, platforms in terms of technology. And remember, at the days, developing for Android and iPhone, iOS, and having web wasn't that straightforward. Now you find much more talent in the space, but at the time it was very scarce. And having the content to really stream, that was a challenge as well on 2G and on bad networks, on very kind of small phones, like at the time we had the Symbians, the Nokias, the Blackberries. It wasn't iOS and Android only. So all of these things were challenges. On top of that, also the funding. You always had to make sure that you're not overspending, but you're not really underspending and compromising your product and your growth and all of that. So I think that there's some sort of art into how to play this balance with all of these. It sounds like you're in front of a mixer and you're kind of playing with those tweaking things and trying to be balanced in everything you do so that everything is going into that direction. And
spoken like a musician. Spoken like a musician.
Now, my musician and my studio hat is on. And you always, have ups and downs. You sometimes make wrong decisions. Sometimes you lose partners. Sometimes you bring in other partners. So this is part of the game. This is also part of the, of the challenges and opportunities of every startup. And you have to expect and be ready for this. So it's not always a great times, and sometimes there are things that can be bad, that can be challenging. But if you build things on a strong foundation and you surround yourself with the right team, partners, you're really loyal to your users first, I think you can overcome all of these challenges.
Walid, let me pick your brains from the time what Eddy is talking about when Anghami was being built. What did you see? You told us in the two founders, but what do you usually see in startups? And for a VC also, the biggest end game is exit. So that how many companies do you see will start like startups, which you see, and then will go and exit on a stock exchange, like list there. Now, we've seen Anghami do that, but do you think the ecosystem is developing in that sense that we would see a large number of such companies happen, or we still have a long way to go on this?
No, I think there will be more exits going through the IPO route. Mm-hmm. This is now, I think, is a viable alternative. And given where the world is at, given the liquidity profile, given the fact that accessing certain stock exchanges will elevate your profile of your company, will give you access to credit. So take banks, for instance. No bank would lend you because most of tech companies are not profitable. But then the minute you list on a major stock exchange, then you start, people start looking at your balance sheet and offering you debt, because we use equity to scale all those companies, correct? That there's a benefit there. There's also a benefit with regards to talent acquisition. So all of a sudden your talent profile, your talent pool gets elevated. Your ESOP plans become real. There are, real. They become not that they were not real, but they become more tangible to the employees that spent years working with you on that. And obviously this creates a liquidity profile for investors. Now, the trading itself and the day-to-day expectations and the quarterly expectations that come with an IPO listing are not for everyone. And it's not necessarily a viable choice for some companies who prefer to stay private, who might take better valuations from private investors, private markets, who might not have the regulatory robustness to deal with a large institution such as Nasdaq or other, because the expectation is high. I think we'll see more of that as we grow, because just the size of the economy is bigger. Now there is a real economy that's built around tech-enabled businesses and technology in the UAE, in the Gulf, in the Egypt, that will have to find an exit route. I'm not sure that we will see. I would like to hope that the M&A activity will pick up as well. The thing is that the good thing about the listing is that founders and early believers get to continue the story, right? They don't get absorbed by other institutions or other companies or other funds. But however, I have a hope that regional players will wake up to the M&A game, and we're able to acquire and invest massively as an alternative to the listing as well, because we're behind on that front. When you look at the exit landscape today, it's predominantly acquisitions from foreign entities, not necessarily from local incumbents who could play a major role in the exit scene. We have amazing assets all over the Middle East. They're just waiting to be activated and going into their, Eddy called it chapter 2. I think this chapter 2 called scaling, global scaling, whether it's the IPO route or an M&A, private equity, it is happening, it has to develop. We need resources and we need talent to develop it. We have major constraints on talent, resources, and capital to write those. But it's early successes like the Anghami story that will, I hope, encourage everybody to step up.
Yeah. Let me ask a question to Jacob. When is it that we'll be able to buy the Anghami, ANGM, on Nasdaq's? When does that happen?
In fact, you can buy the shares right now at the VMAC, which is the SPAC, which essentially will become Anghami. The merger will be completed Yeah, we believe in a couple of months. And then the ticker symbol changes from VMAC to ANGH. So technically, if anybody who buys VMAC today is actually buying Anghami. It's just that we're just going through the process of merger in the US. So, but the actual ANGH to VMAC to ANGH comes in about a couple of months, we believe, once the regulatory filings are done.
So is it more difficult to do regulatory filings with companies which come from this part of the world than, for example, based in the United States? Just a curious question for people who may want to do that.
Any country other than the United States, there's a lot more scrutiny by the US regulators. Maybe not in terms, I mean, for example, if you come from Europe, whether it's England, Germany, etc., probably a little less because we have the same regulatory structure that we have similar than the US. But if you come from the Middle East or Asian countries, whether it's India, China, you would imagine, you can expect a little bit more scrutiny because the regulatory framework and the accounting framework is completely different. For example, the US government accepts US GAAP or IFRS. For example, mostly in Europe, it's IFRS exactly the same way that the US regulators are looking at it. But if you come from Asia or the Middle East, et cetera, it's a little different. So there's a little bit more scrutiny from the accounting point of view and the regulatory point of view, and the legals. But but that's the case for anything in the US. We have our own standards, so therefore, whoever comes to the US have to meet those standards that we've set up in the US. So not necessarily the Middle East, but pretty much anyone out of the US will face a little bit more scrutiny than the US companies.
So having comparing it to the other SPACs that you've done earlier in the same space, and you did it one for India, you just mentioned, and then you ended up doing one here. What was the experience like? Without delving too much on it, being an Indian, I'm always cynical about how much red tape and stuff we can have there. So was it better in the Middle East, considering Dubai and places are actually rolling out the carpet to help in every way possible?
It was far better experience in the Middle East than India. India's regulatory system and the like you said, the hurdles that you have to go through to get a deal done is extraordinary. To the extent that you have to change the laws, to get it done. Right now, you cannot, even if you wanted to, because of certain regulations there. That's why you don't see any SPACs coming out of India. I think I'm the only one who did it 15 years ago, and that was a tremendous challenge. But Middle East I found to be very controlled, whether it's corporate governance. I was actually telling Eddy and Ellie and Walid, I found that Anghami already had a lot of the components we expect from a public company, whether it's the Big Four auditors, whether it's the corporate governance, whether it's the data room access. So because a lot of the Anghami stakeholders are private equity and sovereign-backed wealth funds. I find that any company that has private equity or VC backing does have a lot of the corporate governance that you look for in a public company in the U.S. But yes, your answer is your premise is correct. India is far harder than the Middle East or Europe.
So one of the questions which people are asking, and I'm sure a lot of people have it in their mind, it's what's happening next. So do you see, from your side, a spate of SPACs coming from this part of the region, or spate of companies, which will go, not just UAE, but around the UAE, you have some very substantial homegrown companies which may be looking for that kind of a listing. So do you see that happening? Are you building something? Is it something you can talk about?
Yeah, I mean, from my side of it, to answer your first question, yes, I do see a number of SPACs pointed to the Middle East and Asia, et cetera. One, because everything, the Wall Street side of it's herd mentality. Once one person does it, there are many others who look at that part of the world that they had not had access to. And now with the Abrahamic Accords, et cetera, I think there will be a lot more you're going to be hearing about in terms of SPACs. I know a couple of them already that are focused for the Middle East that's coming. From our side of it, yes, we are actually filing 2 new other SPACs. The second one actually is coming out this week. We're filing, which is a $220 million one, and another one's a $250 million SPAC focus in different sectors, and not necessarily the Middle East, but again, similar to what we had earlier, a global mandate. So, but having gone through the Anghami journey, I'm just sort of surprised also that how many great companies you have in the Middle East, in the MENA region, that could make a great SPAC alternative for people looking for targets. So we found some great targets that we can immediately, actually, I think, put through a SPAC process.
Yeah. Walid, like before I go and ask my last question to Eddy, the question that I want to ask you is, one of the words that got mentioned by all of you was corporate governance in some way or the other, in the sense that you build a company with the right kind of stack, and corporate governance you build into the genes of the company. When you do that, somebody like Jacob finds it easier to work with a company that Eddy built. So what is it that you and I, more as ecosystem enablers, people who work with early stage companies and try to help build an entrepreneurial ecosystem, what are the few things that we need to tell the young startup founders today that build it into your companies and you will increase value without spending money?
That's a great question, PK, and it's something I must have invested over the past 15 years in close to 100 companies, between pre-seed to the IPO. So that question has been consistent across the board. And I wish we could maybe develop a template or a playbook called Corporate Governance Playbook that you can hand over to somebody, to a team, and tell them, this is what you need to do. We're very good at having templates for valuations at every side of the company, but when it comes to actually governance or scaling, we lack that. But there are certain guiding principles that Jacob touched upon, such as the auditing side, the data rooms, the governance, whether it's through the board or through the shareholders. And all of this is very important if you have alignment and chemistry. What are the drivers of that stuff? So first of all, as an institutional investor or an angel investor, you'd expect certain structure. You go with a certain contract, you build a relationship, and through that relationship, the complexity increases. You have more shareholders, more people, more employees, more board members, more partners, wider partners, and then you have to build the infrastructure to serve all of that, having the right support system in-house to be able to have the right numbers in place, the right finances in place, the right auditors, the right legal. All of this becomes more and more important. I also been into companies where none of that stuff happened, and when a deal was on the table, we actually lost it, or lost momentum, because it was so complicated to do all of that stuff, and it took months. I mean, in some instances, I remembered companies who had almost no basic contracts to their employees. When we got into them and started cleaning up that stuff, there was no clear contracts between employees. I mean, things can go very, very wild, and investors, especially early stage, get excited about a company and an entrepreneur and a story, and I want to get into the deal quickly and give you amount of money just to secure it. Tend to forget that it's probably good to have a look at that governance playbook, and that pays off, because I think the due diligence that we did with VMAC has happened honestly in record time. I mean, the whole conversation, we met with Jacob, when was it, around October last year, Jacob?
That's right.
We signed the definitive agreements in March, if I'm correct, right? That's a 6 months journey, between the first dinner meeting the actual and you don't get to do that unless you're prepared 360 to deliver.
Eddy, before we end, I want to ask you something like, this is a dream outcome for most startup founders, taking your company public. What would you do differently if you started again? Would you spend more money, spend less money, find another partner, not find another partner? I want to be controversial here. What all will you have changed if you did it differently again?
First of all, I'm lucky to have Eddy as a partner, because I think one of the important element is to be, in great harmony with your partner. And Eddy and I really go back like 20 years, and we're complementary from a background, experience, and a skills point of view. So that was really instrumental. So I wouldn't do it without Eddy. I would have taken much bolder moves. Every kind of thing that I thought of a lot, I would have probably done in a faster way. So I believe that everything you do will get you its fruits, and everything you don't do with regret. So I believe that, and I wouldn't be afraid of failing some of the things that I would do. So I would be bolder. I would surround myself with the great people that I have today. So I'm lucky with the team we have, and probably this is among the things that makes me proud. For me, I believe that we've been really lucky in this venture.
Hey,
Eddy,
that was a loaded question on purpose, you know that, correct?
Yeah,
I don't want Ellie to come with a knife and stab me for that, but that's the fun part of it, isn't it?
No, I mean, no. On the contrary, I mean, Eddy and I we're lucky to be really partners and friends, and we're brothers before everything. I also believe that probably you should have raised more money, so that you're more equipped financially. You have more fuel, to spend and to grow. Mm-hmm. But overall, I believe that it's been an exciting and great journey, and looking forward to this what we call chapter 2, because this is where everything will be public, and your stock price is gonna be also your barometer of whether you're doing the right moves or not. So it's very exciting, and I'm very confident and hopeful that we're gonna do great.
Eddy, we are lucky that you're here. We are seeing the whole journey of Anghami. I personally feel very lucky to have been there at the sidelines watching you grow. And thank you very much. It's been a great session, Eddy, Jacob, Walid. Thank you so much for coming to TiE today and sharing the journey of Anghami and the SPAC. And we hope to see you soon. We hope to see you with other things to talk about soon in the phase 2. And Jacob, when you're here next time, we will actually have a session in person. Before you go, guys, there's an event survey on. If you would be able to answer that, it would tell us how it went and how we can make it better. On behalf of TiE, thank you very much for attending. Thank you very much for being there. And join me in giving a round of applause to our panelists today, Walid Mansour, Eddy Maroun, and Jacob Cherian. Thank you very much for being here.
Thank you.
Thank you. Thanks.
Take care. Bye-bye.
Thanks for having us. Thanks for your time. Take care.
Bye-bye.